We have new highs again, Dow and the S&P. We're only 17 points or so away from 4,600 on the S&P as well. Look at that, 45.82. So we're getting closer to 4,600 there. There's the Dow Jones Industrial Average today, 35,795, we'll call it. We do have some positive notes out today. Steph, you know, Marko Kolanovic, he's been right on the money lately, telling you that risk assets were going to do well. And he said the risk market rebound is going to extend itself because of what we're learning from many different companies. And it's not just tech. It's all sorts of different sectors, not to mention the seasonality, which everybody has been citing over the last 10 days to 2 weeks. That's a positive outlook for stock investors.
Yeah, I totally agree with his call. I think the markets are higher because earnings have been good. We only have seen about 30% of the S&P market cap companies report so far, so we have a ways to go. But they're beating by almost 13%. 80% are topping expectations. And why it's so important is because stocks follow earnings. They follow profits. And I expect them to be good. I expect 3Q earnings to be strong. I expect guidance to be tempered because of supply constraints. I expect cycles to be elongated because supply constraints. And I think that the setup into the end of the year is definitely risk on for sure. And I think it's more cyclicals, more reopens, because I think that's a theme that will last into next year. And at the same time, I'm buying things like Facebook because I'm looking for growth on sale.
Josh, I do find it interesting when you have two notable strategists and names that frequently get mentioned on our program and the network at large who have differing opinions on where they think stocks can go in a reasonably short and same period of time that they're looking at the market. I said Kolanovic, he's bullish, okay? We've known that. B of A's Savita Subramanian says today we see more downside risk to the S&P 500 through year end. Their year-end target is 4,250. That's notably lower than where we are today. I said we're knocking on the door of 4,600. And a lot of people think that momentum is with the bulls. She talks about extended valuations, near euphoric sentiment, a sell-side indicator, and peak margin risks because of supply chains, labor inflation, et cetera, et cetera, et cetera. Which side do you come down on if you had to pick between the two views?
It's really tough because there's no science involved with this. It's almost all art, meaning everyone's looking at the same data, and then they're overlaying the bias toward what their gut tells them the data is whispering in their ear. But in the end, if there were a formula to take all these data points about sentiment and strategists and valuation and mix that in a pot and come up with an answer, we would all have access to that answer. So we know it's art. So I don't really worry too much about it. Here's the reality. All-time high Dow, all-time high S&P 500, all-time high NDX, XLF, XLK, XLY is going vertical. Home Depot cost lows, vertical. Look at this run by the transports. We nailed that on the show, by the way. Unbelievable. The ARC complex is on a sick run right now. NVIDIA is goated. Pull up a chart of NVIDIA, NVDA. If this metaverse nonsense turns out to be a real thing, by the way, this will be the largest market cap in the world. Microsoft all-time high, XLE 52-week high. That's what you need to be focused on. To try to look at like, oh, there's margin pressure. What you're seeing from the largest corporations in America is they've been successful at passing those higher costs on. They can't do that into infinity, but that's the story of this earnings season. Steph probably knows more about that than any of us. If you listen, company after company, they're telling you that what this big fear in the market is, this inflation story, they're managing it. It's not great, but it's not catastrophic, and that's why that whole rundown of price action I've given you is probably the better thing to focus on because the market's not stupid. People are figuring this out, and that's what we're seeing across the board. You have to really be searching for stocks that don't look good right now. Cruises, airlines, Facebook. I can't really think of that many others. So that's how I look at it. I don't worry too much about predictions. I focus on what's happening today.